Hi, my name is Omar and welcome to my journey of becoming a professional day trader in the stock market. And in this video, I'll be doing analysis of the day trade that I did on April 6th, 2019. And I traded the ETF UGAS. So I bought 380 shares at $17.20. So I was essentially risking $6,536, and I ended up having to cut my loss at $17.19, which was a negative 0.06% loss, which resulted in a $3.80 loss. The thing is, I was down about $258 in that trade, and I will show you why. So if we go to Thinkorswim platform by TD Ameritrade, so essentially in the pre-market, UGAS was consolidating, around these levels right here, and then once the market opened, it dipped, but then it spiked up, going above the EMA line, and then essentially above the SMA and the middle VWAP, and then hit the resistance at the top VWAP, and then it started consolidating around the EMA, went up and hit the top VWAP again, and then it experienced a major drop. And this is because I think the natural gas report came out. So whenever the natural gas report comes out every Thursday around, let's say, 7:30 a.m., the price either like spikes up significantly or dips down significantly. In this case, it dipped down significantly. So what I wanted to do was I wanted to take advantage of the dip that happened, and I wanted to be hopeful that it would reach this level again, right? From here to there, right? Which is a 5.74% gap or profit of margin, right? But that necessarily did not happen. So as you can see, I bought in around 7:47 a.m. So that was 17 minutes after the natural gas report came out, which was at around this level right here, 17.2. And then as you can see, it was consolidating around that price point, and then it started dipping, so it went below its previous support level, and then it found a new support level around 16.75. It started to spike up again, but no, it got rejected, went back down, and then these red lines are just support and resistance levels that I made during the trade, and it went as low as 16.52. So I was pretty much at a negative 3.6% loss, and I should have cut my losses at 1%, but I did not. I broke my own rule, and I just kept holding and wishing that the price would go back up so that I can not take a significant loss, right? So at 16.52 with 380 shares of UGAS, that resulted in a $258 loss, and that is not good. But it wasn't a loss yet because I hadn't sold my position, but that's how much I was down at that point. And as a rookie, I just kept holding on, waiting for it to go back up. So you know what? It did go back up. It started making new support levels right here, and then it went above the EMA line, started riding along that line, hit the middle VWAP, and then right here, right before the market closed, I was able to become lucky and sell at 17.19, and I actually bought in at 17.20. So it was a 1 cent drop in price, but it resulted in a negative 0.06% loss, which was a $3.80 loss. So I made bad mistakes in this trade. I should have cut my losses when it went below 1%, which should have been about here, like 17.03, right? And I think that's a good place to cut it, because right as when it went below that price, it started going even further down. So rookie mistake. I know I'm not going to do this ever again. And yeah, that is pretty much it for this video. And I think one thing to consider is, even though I made this rookie mistake of holding my losses and waiting for the price to come back up, I got lucky. I got lucky that it did come up close to the price that I bought in at, but I don't think this will happen most of the time. I think most of the time I will incur a huge loss if I don't cut my losses at the price or at the percentage point in which I'm willing to lose. And that's it. Hopefully you guys enjoy this video. Please like this video, please subscribe to my channel, and follow me on my journey of becoming a professional stock trader. And I'll see you in the next one.